and it's just a pleasure to be down and be able to attend this event. I'm from CoBank. CoBank's headquartered in Denver, Colorado, and it's a story I'm going to tell briefly here today about the US farm credit system. It just happens that I hail from a sheep and cattle operation in North Canterbury and ended up in Denver. But let me tell you a bit about the story, which is a pretty interesting one, particularly with respect to going through the global financial crisis and how co-ops can really weather the storm, and in this case came out the other end of kind of championing much of the banking industry in the US. Just a brief history about farm credit. It was established in 1916, and as a result really of farmers in the United States being frozen out of credit markets. And so they've, like you see in many cases around co-ops organizing themselves, they sort of melded together and got themselves going on forming the first co-op or credit co-ops. Today it's structured, and I've got a good illustration here in a minute, but it's structured around four what they call banks, which are primarily wholesale funding banks that then provide financing down to about 80-odd associations that are kind of the front door to the rural communities throughout America, whether they're an agricultural producer or whether they're a rural water facility or communications facility or energy provider. Today, the farm credit system represents over 40% of all lending into the US agricultural industry. It's structured in a way where they have their own funding organization, and I'll talk a bit about that in a second, but also has its own regulator. And that regulator has to report into the US Congress as part of the government-sponsored enterprise, which it is. And so it has an enormous amount of support in Washington, DC, and we do an awful amount of lobbying with senators and congressmen there to make sure that rural America has access to good quality and dependable credit. So this just depicts briefly here, just kind of, I hope you can see that well, but at the top I've got this Farm Credit Administration, who was our regulator, and they report up into, as I mentioned, the Washington Congress, the Senate. And then underneath that, and this is sort of the interesting part here, we have our own funding corp. And that effectively is the replacement of having a deposit base in order to fund this system. This system today is about $230 billion in assets, about 6 billion in equity, and you'll find that they'll go out and issue paper on behalf of the system in, globally. I mean, I think Asia takes up about 30 or 40% of our funding today, and the equity piece of it is funded by the actual borrowers and owners of the co-op system themselves. So here's CoBank here. We're a little bit unique in that we both do retail lending to corporate customers, but also wholesale lending to our associations, which are over here, which the other three banks also lend to. And then we have obviously the producers and ranchers and co-ops out there in rural America are ultimately the borrower-owner customers of this system. So they all have equity into the farm credit system. And this is just a quick advertisement here. CoBank recently just was rated in the top 50 banks in the world in terms of safe banks, and one of the 5 or 6 in the US. Michael. What was real interesting, that sort of was a prelude or a really entry point for us into this crisis in terms of the financial crisis, was it coincided with a great deal of commodity volatility in the agribusiness and agricultural sector. And this will just show you here the last 5 or 6 years we were seeing enormous swings in commodity prices, particularly in corn, beans, and wheat, which is depicted here, where traditionally most of those products haven't really had much of probably a bandwidth of $1 here or there a bushel, which is how we price things in grains in the States with like bushels. But it really lifted up from 2007 onwards, so it required an enormous amount of credit to come to the table to be able to help finance these big shifts in the commodity plays. And just to give you a sense of how big some of these numbers are, the soybean price, which is the green line there, at the end of 2011, farm gate value of soybeans in the US was 36 billion. In the corn, which is the red bar along the bottom, that was around 76 billion at the end of 2011. So it gives you the sort of scale of the magnitude of some of these numbers that require an awful amount of credit. So that coincided with this financial crisis, and what we've decided to show you here is kind of what was the loan volume. This has been indexed, by the way, but I'll give you some figures as well. What was the loan volume that between farm credit loans, which is on the blue line, and the traditional commercial banking environment where we saw real retrenchment in the red line. And so you'll see obviously that big separation that took place around 2007, 2008 as a result of the crisis. But with farm credit and its co-op principles and guidelines and its co-op structure, it was able not only to weather the storm, but increase our volume to loan capacity, which was needed anyway because of what we saw on commodity prices, by upward of 15 to 20%, whereas the rest of the credit industry in the US shrunk by about 40%. So again, just to give you some figures on magnitude there, farm credit loans as at the peak of the crisis were around 150 billion, and that grew to 175 billion over the period of the crisis. Whereas on the C&I, the commercial lenders went from 1.6 trillion in loan volume down to 1.2 trillion, about a 40% drop. So, you know, some real shifts in the credit markets that took place during the financial crisis. And what was interesting as well here is that although we were out there lending a lot more money to our cooperative owners and the industry, you know, we didn't subject ourselves to any sort of crazy non-performing loans as a result of doing it. And so this just shows you, you know, what were the non-current loans during the same period of the loan contraction in the US. And as you see, we obviously spiked up, as you would expect, a little there, but still, you know, still coming back to about 1.5% of non-accrual loans today, which is, frankly, you know, a fraction of what it really ought to be historically. So, you know, we didn't take on a whole lot more risk as a result of what transpired. So just to wrap up here quickly, what were some of the successes that we took away from this last 5 years as we went through it? And a lot of it's got to do with the co-op system and structure. Because your borrower owners are also representing you on the board, it's very much a focused mission. And what we found is that our principles are all around providing dependable and accessible credit to our customer borrowers. So we were not distracted by trying to get into any of the exotic products that were out there, which many of the other US banks got involved in over that period. But we also had to make sure we had capacity, particularly for those commodity swings as a result of what coincided during that time. I think the other real important feature here is that that farm credit system, 230 billion in total assets, is also jointly and separately liable for each other. So we have a real lookout on not only the association, ABC, that may be up in the Pacific Northwest, to be able to bail them out if we need to, if they get into any troubles with their loans. So that's a real strong investor attractive appetite when you're selling paper into the market to fund these loans. And then I think finally, as you all know with co-ops, you know, we're not all worried about the share price or the next quarterly earnings report that comes out. And I think that was a real governor of how CoBank and Farm Credit managed through this period of uncertainty, is that we stuck to our guns. We had a very focused mission, and that was provide, you know, dependable and available credit to a very specific industry, being in the rural American and agribusiness industry. So I'll end there since we're short on time, but happy to answer some questions at the end.
Thank you very much.
Thanks.